me go across to Geoff Dennis, independent emerging markets commentator, joining in. And the fresh one, Geoff, very good morning to you from where we're sitting here in Mumbai. But the fresh one is the tariffs on Canada. Now, this is, I don't know, nothing surprising really. Now, you can't say anything is surprising in the land of Trump, but this one perhaps because the impression was that they'd sorted things with Canada.
Yes, it's the impression was they'd sort of things with Canada, but with Donald Trump, you just don't know what you're going to get. And clearly, there's still, in his mind anyway, a problem with Canada, perhaps mainly to do with fentanyl. Although quite how you use a tariff to solve the fentanyl problem coming across the border, I don't know. But what is extraordinary about this to me is that, yes, it looked like we had some sort of agreement with Canada, but also Canada is one of the US's closest trading partners, if not its closest trading partner. And this is not how you treat a close trading partner. So this is a big surprise. It is a negative, although it is worth pointing out that, you know, the so-called taco trade, Trump always chickens out, is still there. The Canadian tariffs would not come in until August the 1st. We don't know if he'll kick the can down the road or change his mind again by then. But certainly not helpful, I think, in general, this latest announcement on Canada.
Right. Geoff, good morning. Hiral on this side. How important is it to really read this entire letter, you know, all the letters that are going out from Trump? Because the markets overall, would you say, are not paying as much attention as they did before? And how big a possibility is it that they will be taken back before the 1st of August? Because there has always been a lot of to and fro.
I think the markets are clearly not reacting as negatively as they did with the first round of tariff announcements, the so-called Liberation Day. And there's a very good reason for that. Well, two reasons for that. First of all, he backed away from all of those, at least for a period of time, pushed, of course, the introduction of these tariffs back to July the 8th and now August the 1st. So that's one thing. But also, i.e., he may well do it again. And I can't forecast that. Nobody else can. I think ultimately he'll have to put some of these tariffs on. Otherwise, he will just be seen as literally someone who's crying wolf, if you like. The second point, and this is very important for the markets overall, is there is a greater sense, I think, now that the inflation risk from these tariffs is perhaps less than people had originally thought. Now, I don't model that myself, but the inflation numbers continue to be pretty good in the short term. And maybe the sense is that this could be more of a one-off price adjustment rather than a really big bump up, you know, on a semi-permanent basis in the inflation rate. And if the latter is, if that is true, that is a reason why markets perhaps are reacting more calmly here. It's a combination, I think, of those two events, those two situations.
Geoff, you reckon world equity markets would follow the damp expectations of an economic slowdown, and will therefore equity markets largely be lowered, or is that priced in?
I think one thing we have to watch, which gets us a jump on that, if you like, is the fact that you've started to see the dollar bounce a little bit off its lows, not dramatically, about close to 1%. Emerging markets still holding up well, up about 14% year to date, and so equities are doing okay. But there are signs now that there's much less negative reaction in terms of U.S. asset prices, whether it's bonds or equities or the dollar, from what we had in April with the first Liberation Day. And therefore, I think that does suggest the markets have got some greater resilience, perhaps on the view the inflation threats are lower, as I said, perhaps on the view that these tariffs will never come in or will get continuously kicked down the road. However, I did post something a couple of days ago, perhaps a couple of days ago, yeah, where I made the point that I think we're entering a period now where it is going to be hard to sustain additional movement up in the equity markets for a while, as we have to absorb this tariff news and until we see what the Federal Reserve is going to do, because certainly for EM anyway, the signs that the dollar is not falling at the moment anymore and is bounced a bit is not necessarily very good news. And so I'm looking for a pause here, a bit of a pullback in global markets, including in EM, but I think it's only a pullback. I think the only way you'll get a big correction here is if we have massive tariffs around the world that are indeed announced and imposed, and also if we end up with a situation where, for example, the US and the global economies look like they're going into recession.
Right, I think lots to cover on this aspect, but thank you, Jeff. Always appreciate your views, and always a pleasure to have you on NDTV Profit.